Kia ora, it's Joe. Right, so this is the third task that we need to do for Tania Limited as their accountants. So we've already accounted for the incorporation of the company and the issue of shares for the business of K Martin and a loan to K Martin or from K Martin. All right. Then we moved on to raising capital from the public, so a public offering of 1 million shares, and we accounted for that and the OBSA subscription, and there was some preference shares as well. So that's on the first two videos. We're up to video 3, which is now we're offering a cash offer. So we want to raise some more capital. So we're going to our existing shareholders and we're saying to them, for every 5 shares you hold, you can buy another share for $1.05. Okay, so we've made that offer. So from that offer, 80% of our shareholders opted to take it, so they've sent in their payments and wanted the extra 1 share for every 5 they held. Right, so we need to account for that. So obviously the money would have been coming in and probably drips and drabs and going into the bank account. All right, so we need to calculate how much we've received. Okay, so if 80% okay, we started with, we need to know how many shares there are to start with, right? And that probably requires us to track what's happened. When we initially started, we had 600,000 ordinary shares. Okay, it's always good to have workings with what you've done before so you can keep a track. Then we went to the public, we sold another 1 million. So that means we've got 1.6 million ordinary shares. Okay, and we've got 350,000 preference, but they're not, we don't need to know that right now. So that's how many ordinary shares we've got. We've made that offer. We know that 80% of the people said yes. So 80% of the 320 that were on offer, 256,000 have been subscribed to, and they've sent in the money. So we should have received $268,800 in the bank. Right, so that money should have shown up in our bank. Okay, and as it showed up in our bank, we would have allocated that to a holding account, a liability account, which is application ordinary shares, just like in the previous exercise, that basically people have given us that amount of money, we're holding it, and we need to either give them shares or give them their money back, all right? But we're going to give them shares, all right? So that's fine. So the next thing we do is on the 15th of December, it's past the close off, we've been receiving money right up until the cut-off date, okay, the 30th of November. On the 15th of December, what we decide, or what we do, is what we offered, and that is to issue the shares. Okay, so by issuing the shares, 268 of $268,800 worth of shares. Okay, basically that's the journal entry, so we no longer owe those people any money. They've got share script. We can close off that account. All right, so we've increased the number of shares we've got and the share capital. So that's the third task we've done for Tania Limited exercise. There's a few more to go, and I'll make a separate video for each one of them.